Hello and welcome everybody to the Texas REIAs. Welcome online on Zoom. Texas REIAs is the largest network of real estate investor associations in the great state of Texas, with over 150,000 members, participants, and attendees going back to 2003. And the Texas REIAs has 257 vendors and provides all kinds of resources to Texas real estate investors, including market data. So we're going to do a quick market update for you guys and tell you what's going on in the marketplace, and so you can be a student in the market and know what's going on in the marketplace. So what's going on in general? Well, this is the Texas Roundup. If you look at the Texas real estate market right now, the average house price in Texas is $429,000, up 4.6% year over year. And the median price is $340,000, up 1.5%. Now, if you only want to look at one data point, like how's the market doing, I would say this is the data point to look at. Inventory. What is inventory? The way to understand inventory is if you took all the houses for sale in the MLS and you stopped adding any more houses for sale, and you just took what we got that's for sale and you just sold those without any more, how long would that last? And the answer is 4.2 months. We have 4.2 months of inventory. So let me put that into perspective. They say if there's less than 6 months of inventory, you're in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. If there's right around 6 months of inventory, you're in a neutral market. So we're still in a seller's market. Now, a year ago, we had 3.4 months of inventory. We were in a hot seller's market. Now we're in a lukewarm seller's market. But it's still a seller's market. Now, if you look at the history, 2021 prices went up 18% in 1 year. 2022, they went up 10% in 1 year. 2023, flat, right? Went up again, and then it flattened out. And everybody was waiting for a correction that never happened. 2024, flat, and then just at the end of 2024, it started to come back up again, okay? Why did we never have a correction? Well, what drives real estate? Supply and demand, right? Interest rates went up, okay? Interest rates went up, mortgages became less affordable, demand went down. But something happened at the same time that happened. What happened? Okay, usually 2/3 of houses that are being sold are resale and 1/3 are new construction. Right now it's inverted. People are not selling their houses. Why not? Because they got a 3% mortgage and they don't want to give it up. So people should be selling their houses. Economy's not bad. People are making money. People would be like, hey, it's time to get a bigger, nicer house, but they're not. So the demand has gone down and the supply has gone down. So when you reduce the supply and then you reduce the demand, what happens to the prices? They flatten out. So if you were waiting for some big correction, that was it, folks. And by the way, I just report the data. Most of the data comes from Texas A&M School of Real Estate and some online sources. We don't have an agenda here. We're not trying to promote an idea. When we think the market's going up, we say the market's going up. When we think the market's going down, we say the market's going down. When we think the market's flat, we say the market is flat. So I'll give you a couple of data points. Dallas, average price $520. Up 5%, median price $403, up 3%. 3.2 months of inventory. Dallas is the hottest market in Texas. I don't know why, but I will say something about Dallas. Interestingly enough, Dallas has always been the bellwether of Texas. I don't know why, but going back 20 years, it's the first mover. And when you look at the four major markets in Texas, Dallas is always the first to go down, first to go up. It's always the one that moves first. Some combination in the economy and the size or whatever, but it's doing really well. It is the strongest market in Texas, 3.2 months of inventory. History, 2021 went up 20%, 2022, up 15%, and then 2023 flat, well, up 1%, which is flat. Now leases are up a little bit, 4%. Lease prices are down a little bit, 2%. What does that mean? Not much is happening. They're down a little bit, but mostly that's because more inventory is been brought online. So what's driving the market? Let's talk about what's driving the market. So real estate cares about two things: supply and demand. Supply and demand. And it really doesn't care about the economy, the stock market. It just cares about supply and demand. So it only in as much as things affect supply and demand does it affect real estate. Like even the economy. You know, during the Great Depression, real estate prices went down a whopping 6%. Nothing. Right? During the Great Pandemic, another 1 in a 100-year event, real estate prices went up 30%. Right? It wasn't the economy. It was how it affected supply and demand. So some of the market drivers, the economy, overall the economy is pretty good. Consumer confidence, they measure this, it's people's confidence level, and they measure it on a scale of 0 to 200. Anything over 100, people are confident. Anything under 100, people are scared. Right now we're at 105. We're a little confident. Unemployment is solid, like 4.2% in Texas. Anything under 5% is pretty much full employment. Job growth, good. Texas is creating jobs. People have work. Right? Stock market, you know, again, stock does not affect real estate, but when people have money in the stock market, when their 401ks made money, they feel a little wealthier. When they feel a little wealthier, they're a little more likely to buy real estate. So that's the indirect effect. And then like business growth cycle. Again, Texas is really doing well. So overall, these are all pushing up. Affordability, interest rates. Now that's a problem. Interest rates went up, and when interest rates go up, they're less affordable, and demand goes down. Although they're starting to kind of, you know, reduce interest rates a little bit, we'll see. House price trajectory is flat. So it's not pushing up, it's not pushing down. Supply. Active listings flat, not up, not down. Months of inventory solid. We're still at a seller's market. Never left the seller's market. You know, we're at 4.8 months of inventory. Housing permits trajectory, we're not building enough houses, right? We are not building enough houses. In fact, I don't know if you know this. Do you know we're in the middle of a housing shortage nationally? Who's heard of this, housing shortage? Yeah, we have 6 million fewer houses than we have people that need a place to live. So we're in a national housing shortage. Construction, let's talk about that. We got a problem. The average general contractor is like 58 years old, and they're dying. They're getting old and they're leaving, right? And the kids are not replacing them. So I got a piece of advice. If you have a teenager, don't send them to college. Buy them a hammer. Yeah, seriously. I know plumbers that are making $1 million a year, guys. Seriously, plumbers are making $1 million a year. You go to school, learn a bunch of useless stuff, right? You know, get a lot of student debt, and then end up working for some jerk. And I did it. My parents did it. And now I'm a father, and I got a teenager, and I got to tell you, he's not required to go to college in our school, in our home. If he wants to, he can. But I mean, there's so many things you can do. And contractors are making a fortune. They really are. So think about that. And we got a problem. The labor prices are ridiculous. You know, I used to be able to build a house for $100 a foot, and then it was $120, $150, and then it was $180, and then it's $200, and now it's $300. I mean, it's crazy how expensive. It's all labor. Housing demand, closed sale trajectory, flat. Pending sales trajectory, flat. A lot of flat stuff. Migration. Now, this one, honestly, this should be a triple-sized bullet. This should not be the same size as, this is the biggest thing on the whole page. This should be triple size. What is migration? Migration is the ratio of people moving in versus moving out. It's basically population growth, right? So last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? Yeah. And then there's like 10 million other people. We don't know where they went, but we know there are a bunch of them here too, right? And the point is, we are a magnet. We've got the greatest economy, the greatest people, the greatest everything, and everybody's coming to Texas. We're not building houses. We don't have enough houses, right? And everybody's got to live somewhere, either an apartment or a house, right? And that's just driving it. So we have huge migration, which is pushing the demand up. You know, and then little wild cards. Got a new president, a couple wars going on, whatever. So let's see our opinion. No right, no wrong. I'm just curious about you guys' opinion. Who thinks from here we'll probably see prices go up? Who thinks prices are going to go up? Who thinks prices are going to go down? Okay, well, it's your opinion. I'll share our forecast. They're going to go up a little. Interest rates will probably drop a little bit this year, anywhere from 0.5 point to 1 point. And this should see a mild rebound in sales. And we are expecting this year to not do much, maybe be up a little bit. And I'm going to tell you, we've been doing forecasts for 20 years, and our forecasts are usually spot on. And I'm not saying it's because we're geniuses. We're not geniuses. I'm just saying it's because it's not that hard to forecast this, right? Trying to forecast the stock market, impossible. Trying to forecast the economy, impossible. Trying to forecast real estate, it's supply and demand. We know exactly how many houses we have. We know exactly how many houses we're building. We know exactly how many people live here, about how many people are having babies, how many people are moving here. We know what we got, we know what we need, right? We know all the supply, we know all the demand. There's a couple little things we don't know. Is just the interest rate's going to go up a little more or down a little more or whatever. But there's just not that much to know. And so that's the forecast. And like I said before, if we think it's going up or down or sideways, we will tell you. And we have strategies to take advantage of every market and every opportunity.